Three candles, Wicks 1 and 3 don't connect. That empty space, the market left it unbalanced. Price must return always. 4 ways to trade the gap. This is the gap. Flyburger black, 3 candles, Wicks don't mean. That imbalance is a magnet. Price will repeat. Mitigated, closed unmitigated. Still alive. 4 ways to use the gap, fill reverse, target thrive. Shelf overlap, break a block 50 parts, still read days. Inducement, partial fill, purge with full close 10 days. Really close to the gap, next day, bias lock. The gap mandatory visit, price will not be blocked. One side of the market so dominant, the auction breaks apart. No counterparty fills the orders, price skips over, no fair start. The wicks of candle, 1 and candle, 3 leave space between. That empty zone, no fair pricing, imbalance on the scene. Candle 2 is the lone candle, the single directional push. Institutions transacted there, all in the rush. The space above or below that candle, the gap is born. Unmitigated, still active, a magnet, that's the norm. FVG at the opposite extreme. Supply or demand, dual pressure there. Entry momentum plus gap pull, price reaches both. That's the pair. Mitigated means it's closed. Wicks now connect, no longer in play. Unmitigated means it's open, still pulling price that way. Check the status before you trade. Active or already done. Unmitigated FVG stuck in one direction confirms the run. Fair value gap, 3 candles, Wicks don't mean. That imbalance is a magnet. Price will repeat. Mitigated, close unmitigated, still alive. 4 ways to use the gap, fill reverse, target price. Shelf overlap, break a block 50% reclaim. Inducement, partial fill, price really full, close open. Daily close to the gap, next day, price lock. The gap mandatory visit, price will not be blocked. Reversal entry, the gap needs 2 things, shelf and break a block. Shelf is the range where institutional orders were in stock. Break or a mitigation block overlaps the gap 2 layers strong. FVG inside the shelf and crossing the breaker, this is where you belong. Mark the 50% of the gap Fibonacci, midpoint clear. Institutions partially fill, unfilled orders, there that's the tier. Statistically, price rejects at the 50, that's the entry zone. Stop beyond the FVG extreme, rejection entry, not alone. Approach matters, direct is best, 1 or 2 candle consolidation. Slow multi-consolidation approach, weaken probability. Inducement price touches only the top quarter of the gap. Partial fill looks like mitigation, that's the crap. Bulls by the partial fill, inducement forms above. Stop said, price purges those bulls, then fully close the gap. Don't forget, 3 candles, top is bound, empty space unmitigated. Price must return, red target, full press at the first selection, is 3%, rejection, cigarette approach, slow approach, Inducement, fragile fill, full close, come away, daily FVG, strength steady bias, day 1 stranded, day 3 declining. Inducement full sequence, partial fill in the top walker. Price rallies, inducement for bulls, new stops in order. Bird sweeps, those bull stops, liquidity collected clean. Price returns, closes the full gap, continuation machine. 1 warning if the pullback reaches the discount zone during the inducement. That nullifies the setup, new micro trend could start assessment. Fixed down zone reach means price got enough discounted liquidity. New trend could begin from there, invalidation is the key. Daily buyers mark all and mitigate the FVGs on the daily frame. Current daily candle fully closes through the FVG, that's the claim. Closes above, next day bullish, closes below, bearish day. Day 1 is the strongest bias, day 3 it starts to fade away. Body must close through, not just a wick, full candle body confirms. The gap is never random, every unmitigated one has its terms. Fair value glove, 3 candles, wicks don't meet. That imbalance is a magnet, price will repeat. Mitigate, gain, close, unmitigated, still alive. 4 ways to use the gap, fill, reverse, target right. Shelf overlap, break a block, fist beat, percent crack.